right, welcome back, everyone. This episode is getting hot and sweaty. Anyway, now we've got Chris Yu from SignalPlus and Sander from BlockTech. How you doing, guys?
Very well, thank you.
Well. Welcome, guys. Welcome to the club.
Good to be here. It's boiling. It's boiling already. Yes,
it is. So, Chris, I've definitely met you before, and we've done some Twitter Spaces together.
Yeah.
Your platform is extremely useful at helping retail traders and even institutional traders, right, these days, navigate the world of options trading. So why don't you tell us a little bit about how that's going and what you guys are doing in terms of building the platform, any new features you're adding, things like that.
Sure. Yes. We viewed the platform initially try to basically help everyone. And over the past 3-4 years, we can kind of shaping ourselves to be more institutional focus and more advanced function. And as you know, it actually took a long time to do the infrastructure for institutional users. So it kind of like a normal roadmap of building everything up there. And we have 3 products line. Basically, most of the products are serving the institutional, and the platform that you are familiar with, where we do the AMA together, is really serving both retail and institutional on more like a EMS system that helping the user to execute options on Deribit smoothly and efficiently, and also different functionality for them to understand their risk to P&L better. And we also build like market making infrastructures that serve the market making firm that come to the industry, want to be a market maker on Deribit, and it takes like 2-3 years time to build all the infrastructure, but then they can plug in and play with us.
So what are the features that like a market maker would need that a retail guy wouldn't necessarily need?
It's a completely different system, to be honest. Option market making is more like a high frequency trading. You will need to be super like accurate on the hedging. Like just for the data hedging part, is already much more complicated in terms of the functionality versus a simple data hedging functionality for the retail user. We can turn on the DDH function within the platform. But then for the DDH on the market maker side, the user have to really decide how do you want to do the initial data exchange? How do you want to hedge it to try to be maker or try to be like fast enough to be taker, to sacrifice some bid offer? All of those is customizable, and that already generate like around 80 to 100 parameters for the user to decide how do they want to hedge. So not to mention on the different dimensions of a vol risk.
Interesting. And Sander, tell us about BlockTech.
Yeah, so BlockTech was founded in 2018. There's 2 founding partners, Sjoerd and Dennis. One of them is a former Optiver partner, so it's coming from the HFT world. The other one has a tech background, so the combination of the 2 was perfect for crypto. Yep. And they really started with trading crypto options, which is a bit of an unusual start because most people start off in the Delta 1 side or in the spot markets. We built out the options initially, and over time grew into trading the whole spectrum.
Are you market makers in the space?
We're market makers, yes. So 100% crypto native. Deribit is a massive venue for us, being option players, as you can understand.
It is the main venue.
It is pretty much the main venue if you look at the options side of the things. And over time, we've grown into approximately 100 employees globally.
Nice.
And there's lots of stuff happening and looking at new markets, and there's obviously new initiatives within the industry. It's changing a lot also in terms of what you need to be competitive, new players.
Ask you, like, there's a lot of market makers in the space now, right? Like,
yeah.
There's tons. In fact, we're going to probably talk to about 10 of them today.
Yes.
So, like, what have you got to do now to like build an edge and to differentiate yourself in it and outcompete?
Yeah, that's a good question again, because we're coming from the option side and we're actually now moving into spot. And we realize it's quite a different setup that it requires in terms of network and connectivity. So it's already getting the TradFi race to the bottom in terms of latency is already very much present in crypto as well now.
I spoke to one of those providers just now.
Yeah, exactly.
What's driving that decision then to sort of move into spot?
Yeah, we think we've got a bit of an edge in terms of having the options flow and the deltas or the Greeks coming out of the options, that you can start using the Delta 1 market more, the spot market more in trying to hedge yourself and become more efficient in trading the whole ecosystem. But also when you look at the other market makers, a lot of them started in spot and now trying to move into options, which is a massively different product to trade, right?
It's a multi-dimensional product, right?
Yeah.
Whereas the other one's just linear. right? So
Correct.
It's very different.
Yeah, absolutely. And but also I think in the options market, things like latency are slightly less important. It's more about your pricing, and how do you manage your portfolio. And
Are
I
you
think,
market making altcoins as well?
no, we're very focused on the mains BTC and ETH, really, to be honest.
Okay.
And we've taken the approach. We tend to go for the most competitive, most liquid markets, and we like to feel like we're good enough to be able to make a living out of that. And we steer clear of the tails.
Are there a lot of predictable flows within those markets now? As a market maker, like I used to be a market maker in index options in equities, and really you like to lean against the predictable flows that are coming, and they can be quite cyclical, right? They can be like every month or every week or whatever.
Yeah.
When I look at the vol in crypto, there's definitely a cyclicality to it, but
Yes.
every week, right? So is that something you use a lot?
Yeah, no, that's part of the new initiatives internally. So we're trying to reach out more to end users or broker platforms like the SignalPlus. So we know each other as companies, and indeed they have certain clientele that likes to do specific trades linked to a spot level, for instance. So we've seen Bitcoin trailing off not so long ago. And the put sellers come in, and then all of a sudden you see call buyers or call spread being bought again. So it's a bit spot related. In terms of like the recurring flow, what you see in the index world, where you have systematic overwriting or so.
Yeah.
It's not systematic. I think it's really much more spot linked, but you know better.
There's a bit of a reoccurring flow, like two group. Number one group would be the structured products. But then for now, the structured products mainly focus on like due investment. And that's also why you would notice like after 4 p.m. on Friday, generally the vol will drop. Of course, that's because a weekend is coming. But that's also because like tons of due investment flows are rolling at that time. And then I think the volume is right now I think it's small. The whole market due investment volume is around like 1 to 1.5 billion notional per week. And out of that, there's a lot of
1.1 to 1.5 billion dollars notional per week. What does that equate to in Vega, like in terms of optionality?
To be fair, it's not really. There's not really a pattern for that. It really depends on how volatile the market is, and because those flow mostly coming from retail, and the retail way of seeing due investment is how likely I'm going to get exercise or strike on the expiry. So let's say this week market's up and down a lot, and then this week you will tend to see more win supplies. That's also why if we look at the crypto vol surface, the win side is relatively cheap, compared to where the fair values should be. And the other part of the flow that is starting from June last year, this is starting to become significant only mid of last year. Like so many family offices, they are holding BTC, they are looking for yield, and the linear arbitrage strategy is no longer as attractive as it was. And they start to look at this trade yield. Exactly. And they start to look at yield enhancement in crypto. And that's also how like a TradFi structured product started, right? But then right now they start to basically do cover call percentage strategy.
Speaking of covered call selling, a couple of years ago, the Ethereum call seller was dominant, right? It was flooding the street with Ethereum.
That's what anyone said about.
Ethereum just couldn't move, and that's clearly gone away, right?
Yeah.
And I guess part of that is probably because just being long Ethereum is becoming a more challenging trade. So you're not as long, you don't have as much to call sell against, right?
Exactly.
But like, do you think that flow comes back? Because we're trading like 20 vols over Bitcoin in Ethereum implies. Realize is justifying it right now, but it probably won't forever. Like, do you think that vol seller comes back or similar flows come back?
I think that part will take some time. Right now, most of the flow coming from BTC that contribute part of the reason why BTC inclinable is more somewhere we feel like comfortable. But then for Ethereum, why it takes time is because the Ethereum move is very, very binary. Most of the time, if normal days are realizable, it feels like a dead market. Why is always asking ourselves, why is impliable high up here? But whenever it moves, you feel like, okay, it's fair to be there.
It's kind of compensating for the fact that it's not moving now, but when it decides to move, it's going to do 10% in a shot.
And right, especially people get hurt from what they used to be selling all the calls, and when market moves, they got wiped out. And now the way that they start to, for the big Ethereum holders, the way that they try to do is they start to try to hire professional trader, or at least start to talk to professional trader to ask them, hey, what do you think? should I sell? And all the professionals say, maybe be cautious, right? So interesting portion. And the speed of selling is definitely slowing down. So that to come back takes some time.
Sounds like once bitten, twice shy, right? You've been run over selling calls before.
Exactly.
You're not going to do it quite as aggressively. What do you see on that side? Obviously, you're in the market making space. Like, do you think call overwriting is going to come back in a big way on ETH or not really?
It's a tricky one, to be honest, because
ETH just gets no love generally right now.
no, but exactly. Yeah, it's just become very quiet, also in the vol space for ETH. And we've seen Bitcoin is much more consistent in that sense, and there you've seen a bit of a vol change as well. It's becoming more commoditized, or it's wider spread as an asset, and vol is just creeping down over time, right? And recently it's quite incredible, but it's realizing and trading below S&P vol at the moment,
unheard of.
which is and you tend to trade from a long vol standpoint, at least we do, because you've seen some funky moves. But it's been difficult.
It's been painful.
Yes. No.
Bleed, right?
Yeah. So, but we're looking at the overall vol level, and if we feel if it comes to a certain level, okay, it's probably worthwhile to.
Is there much zero DTE volume trading in Bitcoin, like 1 day options?
Yes.
What percentage of the flow would you say is zero DTE? Because in S&P it's like 50%.
Yeah, no, I wouldn't know the exact percentage, but yeah, it's significant. It's very short dated.
And is the liquidity good in zero DTE?
Yeah, massive. We were just having a chat before we came on the podcast about, okay, all the flow is focused on the short end, but up to 4 months, basically. That's where all the volume is concentrated.
Yeah.
Chris is like, we would like to see more liquidity in the 6 months up.
Yeah.
And we get asked that quite a lot by Deribit and some of our the industry players, like, can you provide liquidity in the 12 months options? And yes, you can, but if you can't trade out, then what do you do?
I mean, well, exactly, like, because what you said about the S&P vol, the relative value between S&P vol and Bitcoin, like Bitcoin trading under S&P, whilst it's strange, it can happen in the 1 week, even the 1 month expiry.
Yes.
But when you go longer out the curve, if you could get into that spread 1 year out at anywhere close to flat, you would do that in your entire fund capital, basically.
Yes.
Because it's a no-brainer.
But you would need a lot of capital to maintain that position as well. That's a bit the challenge, right? The collateral and the margining can be a bit high at times.
Okay. All right, guys, we're going to call it a day. Otherwise, you're all going to be sick.
You can be melting, yeah.
But thank you for coming out in the sun.
Thank you very much
Having a chat with us.
Yeah, it's interesting. Great, boss.
All right.
Cheers. Yeah, thank you.
All right, good luck.
See you again, Sander.
See you again.
Cheers.
Thanks. Bye.